Welcome back to the Snod Pod. I'm John Snodgrass, your mortgage resource, where we're going to talk real estate, mortgages, and beyond. Today, I've got Joe Sladky of Capital Insurance out of Brookfield, and he's an insurance agent, but we're going to focus on homeowners insurance, and part of the buying process and all that goes into the homeowners insurance part. So, Joe, I just want to say welcome. And let's start with just how did you get into, insurance, slash homeowners insurance business?
Sure. Thanks, John, for having me on. I appreciate it.
You're welcome.
So Capital Insurance Agency is a independent insurance agency out of Brookfield, like you said. So we represent multiple carriers. We have over 20 personal insurance carriers that we represent. And the business was started in 1977, actually by my grandfather, Joe Schmidt, out of his kitchen in Brookfield. So we are a family-owned agency. I'm the third generation in our office, and my father, Jeff, is the owner of the agency, and he's been doing it for, I would say, about 33 years. And we have a total of 5 employees. That includes my grandfather, who's 91.
Oh, wow. He
still comes in, and he's actually bringing in new clients as well. So we tag along with him on his appointments and make sure everything is set. But for the most part, he can handle it on his own.
Nice.
So,
well, hey, at work keeps you sharp.
It does. It does. So we have four other employees in the office, including the Jeff and myself, and we're there to focus on customer service and helping our clients as best we can.
Okay, perfect. I recall you saying something to the effect of you're kind of shopping around almost for the customers to get the best deal.
Right.
I know you've had me with Acuity. And then you're like, hey, maybe there's a better deal, perhaps.
Yeah. So every time your renewal comes up, we do get notifications, and we do review every policy for the most part, and make sure that, hey, these coverages still fit your needs, because when you do have, as you continue to accumulate assets, you have kids, you change cars, obviously your insurance policy is very fluid. So we're there to advise you and make sure that we have the correct coverages in place at the most competitive rate, which is the perk about being with an independent agent. You're not just locked into one company and that's all we can do. There's always another option out there, whether it's more competitive or not. That depends on your personal situation.
Yeah.
So
I met you about 10 plus, maybe more.
Yeah, 15, I would think.
And when I first met you, obviously I showed you my policy, and you're like, oh yeah, we can beat this. And but I guess first, can you tell us what does a standard home policy look like? I'm a buyer, be it a first time home buyer,
sure,
or any buyer. They call you, what are you guys talking about? What's the policy look like?
Yeah, absolutely. So basically, in a nutshell, your homeowner's policy is comprised of 2 parts: the physical portion of your home that you're purchasing, and also then the second part is your liability. So if somebody gets hurt on your property, or you have a dog that bites somebody, or you cause damage to somebody else's property and you're held liable for it, your homeowner's policy kicks in for that up to the certain limit.
Okay.
Then there's the physical home that you're insuring, and that's based on square footage, year built, and a bunch of different factors that we ask.
Okay.
So
what about, I know we've talked in the past, I've asked you a question, I look at the policy, I'm like, well, what's the replacement cost versus what I bought it for per se?
Sure. That's a good question that a lot of people get tripped up on.
Thank you.
When you're going ahead and buying a new house, for even numbers, let's say you're purchasing a house for $400,000. Okay, you're getting a really good deal. You're buying it from a family friend, something like that. Okay, so you're going ahead through the mortgage process, getting all your ducks in a row, and it's time to talk about insurance. Well, based on all the questions that I ask you, we might find out that your home, if there was a total loss, a fire, a tornado, something that we need to rebuild from scratch, it's going to cost $550,000 to go ahead and
so that's the
rebuild.
Replacement cost.
That's the replacement cost versus the market value.
So
the policies that we represent and sell are replacement cost policies. So it's to your benefit as the homeowner that if there was a loss, you're going to be covered, so you're not out money.
Right. So I'm like, oh, if you didn't do it, it's like your house burns down.
Right.
And I've had a fire, a storage unit. We won't go into that, but Joe was grateful, awesome to work with on that. But like, so I bought it for $400,000. I didn't do the replacement value, and then all of a sudden it burns down. You're like, oh, I'm $150,000 short.
Yeah. For an extra, for $150, $200 more a year.
Yeah.
You could have had that coverage.
You could build a whole house instead of 2/3.
Right. Hindsight would be a good thing.
Thanks for making sure I got the right.
Yeah, absolutely.
So. I guess maybe a last topic, and then maybe you can stick around for one more episode.
Sure.
Okay,
that'd be great.
What about anything that like a first-time home buyer that I've referred you in the past? Like, are you guys talking about anything different compared to like a seasoned home buyer? Not that I am. I mean, I just trust you. I usually just say, yeah, Joe, tell me what I need.
Sure. So there's a lot of different things when you're a first-time home buyer. You're looking to. There's a lot of costs that come at you that you're just shell-shocked by, or you could be anticipating it. So for homeowners insurance, right now the industry, the rate per month on about a $450,000 home is about $125 to $175 a month. That's a good ballpark number to budget in when you're looking at that. The roof, the age of the roof and furnaces, those are important items that homeowners insurance are focused in on because those are the key components of losses.
So I shouldn't tell you my furnace is like 12 years old.
12 years old is fine.
Okay.
45-year-old is not okay.
I've heard of some people like that.
Yeah.
What about, last thing, we'll wrap it up, but like credit scores, does that play a role in the rate that you're getting?
It can, yes. The companies don't necessarily pull your credit score, but they run an insurance credit score, which doesn't ping your credit.
Okay, that's good.
But it just pulls a bunch of different reports from, let's say, the DMV and some other histories that it pulls in. Okay. So it does benefit those who have good credit. It's positively correlated along
Got
with.
it. So
with that.
likely, is that fair to say that you might get a better price if your credit?
Yes, I would say so. If you have a higher credit score, then you would definitely have a favorable insurance rate.
Okay.
So,
all right. So we're gonna come back in for one more.
Okay.
But before we do, Joe, can you just tell how can people get a hold of you if they want to get homeowners insurance or any other kind of insurance?
Yeah, absolutely. So our office is located in Brookfield on 192nd on Capitol Drive, and our phone number is 262-781-8080. And my email address, which is probably the easiest way and most accessible way to get in touch with me, is Joe, Joe, at capitalinsurancewi.com.
Okay.
So
perfect.
We'll be monitoring all of those and ready to help you out whenever you need.
Okay, great. And if anybody just wants to reach out to me, I can get you right in touch with Joe. But thanks for joining us on today's episode of the Snod Pod with your mortgage resource, John Snodgrass, where we talk real estate, mortgages, and beyond. Thanks for listening and watching. We got some more good stuff coming ahead with Joe and others coming up. Thanks a lot.